See you.
Yes, it's good to see you too. Lagos, you can be a part of the conversation on WhatsApp. It's 0809 444 0981, and also use the hashtag Business Express 981 to be a part of the conversation on Twitter.
All right. So the market was flat yesterday. I'm going to quickly brush over that 0.01%, but it was in the negative zone, but essentially flat. Let's quickly, we have a lot to talk about today. Chukwemeka on Twitter sent this question. Dear Rotus, please, can I use or can one use dividend payments by banks to determine the health and strength of a bank vis-a-vis this bank versus this other bank for year end 2018? Jeremy, what's your answer to that question? Can we just use only dividend payments?
No, you can't use only dividend payments. There's quite a bit more to look at when you're looking at the health of a bank. I mean, dividend payments is just a bank paying out at the end of the year profits to share a proportion of profits to shareholders.
Mm,
But the truth is that a bank can be quite strong, but know that look, I need to reserve capital because I don't want to come into a costly debt market
right.
to borrow when I can, fund it internally. So it goes way beyond just
Just
dividend payments.
dividend
You have
payments.
non-performing loans, you have capital adequacy, you have actual growth in revenues and
Hmm.
profits to look at. So it goes way beyond
And the
dividend.
interest income as well, right? Since
Yeah.
that's the lifeblood of the bank. All right,
Yeah.
Chukwemeka, I hope we got that. It's way more than dividend payments. Thank you for that, Jolami. Okay,
Mhm.
Jolami, let's get into the big story of the day. You see, Lagos, this is why on Monday I asked my guests what they thought the MPC was going to do. On Tuesday, I asked my guests the same question. The central bank essentially surprised everybody. Although every time they do that survey of economists that think that try to predict where the rates will go. There's always one or two people who predict a rate cut, right? But I think it was almost universal. Everybody thought we were going to keep the rates the same way. But Jolami, the central bank cut the benchmark interest rate yesterday by 50 basis points from 14% to 13.5. Why? What
I
happened?
mean, I can see why a lot of people forecasted this, and even ourselves, we forecasted that they would keep the rates.
Okay, you
Although,
guys too, yeah.
yeah,
Uh-huh.
although we did note that the case for a rate cut was there and compelling,
Mm,
but basically the CBN has kept the rate at 14% since July 2016,
right.
basically on price stability concerns.
Okay.
So it's about for them it's about attracting and retaining capital inflows to help support the currency and also tether inflation
Okay.
because in Nigeria inflation is mostly cost push.
Right.
And so I mean if you're looking at the factors in the last over the last few over the last few meetings that they have considered, you look externally where policy normalization was happening in the US and the UK
Mm-hmm.
and the impact on that on capital flow reversals, they're giving more attractive rates in those jurisdictions.
Mm,
And now that the the UK with Brexit concerns have basically halted, and the US as well have basically paused all rate hikes.
right.
Then you have a situation where funds flows into emerging and frontier markets is going to be strong again.
Mm-hmm.
So then you have to look at at that point you have to look towards other concerns. So they're looking at growth.
Growth.
Yeah.
Okay.
So typically, if that's where it becomes little bit strange because a 50 basis points cut is not going to have a significant impact on borrowing costs,
Okay. All right.
which means that where's the growth going to come from?
Yeah.
So it's more likely a signal to the market to realign to the rates, because if you look at the average TB rate right now,
Mm-hmm.
it's actually in line with that 13.5% MPR,
Okay.
and so the rates might now have more of an impact on market that it hasn't had in the last few years. I mean, no one talks about the NPR when today, if the CBN comes into the market for an open market operation
Uh-huh.
and sells the treasury bill at 12%, the market moves to 12. If it's at like 18%, the market moves to 18,
Right.
regardless of where the NPR is now.
Right. Right.
So this seems more like a signal to the market that yes, we want to focus on growth, but realign back
Mm.
the importance of the benchmark interest rate for determining the rates in the market.
Right,
To,
it's in the market. So, would you? Okay, I want to frame this properly. Would you say the MPR, the monetary policy rate, is irrelevant?
I, I
Would
mean,
one go as far as saying that?
I mean, it's something that it's been there since 2016. I
Yeah.
mean, for that 14% level,
Right.
it hasn't changed, but market rates have been quite volatile in the period,
Right. Since
and
that time.
that's because open market operations are basically where the CBN comes is the policy lever they've been using to
Right. To
move the
control
rate
things. Right.
exactly,
Right. Right.
make it more attractive. You want to bring foreign investors in, or in a point where you want to keep balance, bring it down.
Mm.
So I mean, over the last couple of years, we've not really paid attention to it because it
Right.
doesn't really matter.
Exactly.
But
Okay.
now this realignment might mean the market now has to pay more attention to the intentions of the central bank
Mm.
and where that rate is going to drop, or far
Okay.
more attention than
Than
previously.
previously.
Yeah.
All right. So if you're listening out there and you're going to be gisting about this in the morning over coffee with your colleagues, there you go. It's really look at the OMO rates. Okay. What about the impact on the fixed income and equities market? Well, how do you think? I mean, the market was down yesterday, but then the market closed at what 2:30 p.m. That's around the time they were announcing it. So I don't know if we can really say yesterday was a reaction. But do you see any reaction from both fixed income and equities?
If I look at the fixed income market, I would say that if you look at the treasury bills market, it sort of now aligns with the MPR.
Okay.
So what I wouldn't expect to see so much of a market reaction, although market should trend downwards.
Okay.
Because if you look at the average bond yield is about 13.6. I'm sorry, the average bond yield is about 14.3.
Mm-hmm.
The average treasury bill yield is about 13.5, 13.6.
Okay.
The market should react now that the CBN seems to be aligning that rate.
Mm-hmm.
The only thing that will cause no market reaction is if the CBN came in today for an open market operation and sold at the same level.
Right. Right.
So
Okay.
otherwise, markets should react as normal to a rate adjustment. A downward rate adjustment should mean market moves downwards.
Okay.
Now, if you look at the equities market,
Yeah. Yeah.
I mean, the equities market, the factors that have been hampering every equities market performance are removed from this. You have political risk still rife.
Okay.
I mean, right now you have so many investors sitting on the sidelines, not coming until May handover, and that's going to affect the market. That's what's affecting that market primarily. The MPR, not really. I mean, if you look at it from the bank perspective, you might say that lower fixed income yields has an impact on interest income,
All right.
which also has an impact on bank performance. But again, the adjustment is not so significant that banks should not be able to offset this with just a moderate increase in loans and advances.
Okay.
So to buffer the interest income. So I mean, equities market performance shouldn't be impacted by this change.
By this. All right, good stuff. Now I'm seeing, yeah, Kayode already said, we kind of answered this question already. Benga Akamo is asking, what about saying that the economy has already been pretty sluggish? So he's asking if this will have any impact on the economy if we go wider than the fixed income and equities market. But what do you see? Benga, thanks for your question.
I mean, for me, it comes down to access to credit,
Okay.
credit to the private sector, and if credit to the private sector is not going to be significantly impacted by this decision, I mean, if you really wanted to do something about that, you cut by 200 basis points.
Thank you. That's what I've been pushing for years, but it hasn't happened. Somebody tweeted me yesterday saying, Rotus, you should be happy about this, but it's too small. But yeah, you would have to make a bigger cut.
You
if
would have
really
to
want
make a bigger cut, but then you have other concerns
right,
that you have to,
like inflation.
Yeah, exactly.
Uh-huh.
So I mean, without a more substantial cut, I don't see this meaningfully impacting the growth rates we're going to see this year. It's still going to come in around 2.6, 2.9%.
Okay, all right.
We got messages here. Olufemi says, good morning. Now that the CBN has cut the MPR, banks are not reducing their lending rates, but if the CBN had increased the MPR, the banks would have immediately increased their lending rates.
Well, yeah, I mean that's right.
Yes.
I mean I think you've already touched on that.
Yes.
And Ibrahim says, any significant impact on the strength of the naira?
Thank you for that question. I mean,
No,
do you see anything?
No, I mean, for the strength of the naira, what would come into play now is capital inflows and how that helps the reserves grow and how that allows the CBN to defend the currency. So right now, because funds are already being attracted to emerging markets and frontier markets,
Right.
that's what gave them this sort of leeway to say,
So
what,
say,
let's
let's cut
cut
the rate.
without, and they wouldn't expect to see significant capital flow reversals
Right.
because again, on a risk-adjusted basis, our yields are fantastic compared to what you would find in the UK, the EU, where it is even negative.
Right,
Yeah.
right.
So I
the
mean,
money was coming in anyway.
it's coming in. Yes.
Right. Okay. All right. Good stuff. What about this? Also, I think that pretty much does it for the MPC meeting. Thank you for that. There's also some talk here. I think the central bank governor, Mr. Mefele, he gave some kind of guidance that, and there wasn't much meat on this story, but I think it was Business Day that reported it, that they might make a recommendation to the federal government to rebase our GDP again. Last time we did this was
2010.
2010. Okay, so what would be the, I don't know, what would be the reasoning behind
I mean,
that it's due again?
When it comes, yes, periodically you should rebase, but basically, economists call this structural transformation. Basically, when you want to show the true structure of the economy.
Right.
So like when we did in 2010, what you saw is that services became a larger part of the economy.
Mhm.
So right now, I mean, the intuition would be you want to show the true structure of the economy, but I don't see any sector that has really grown so
Grown since
significantly to
2010, right?
yes,
Right.
maybe save for ICT
Okay.
that might now have a larger contribution to GDP.
Okay.
But I mean, there are also some benefits. I mean, if you look at it from a planning and policy and investments making perspective, having a truer sense of the structure of the economy is positive.
Mm.
Yeah, but I mean, it seems quite a short period since 2010
To do so.
Yeah.
All right, I think Kayode, that's all the time we have.
That's all the time we have.
Solid stuff from Jolami from Afro Invest. We appreciate you coming in, sir. And thank you guys out there for your messages. You have enough information now to go educate those that haven't listened to the show. Tell them to listen to the show as well, so you can tell them what's up and the impact of the MPC rates or MPR rather being cut. Thank you, guys. Thank you all so much. All right.
All right, Lagos. Don't forget, more great programming comes your way. This is Smooth 98.1.